Welcome, everyone. We wanted to create this recording today as the SBA has updated the rules for PPP2, also known as First and Second Draw. It's a new year and a new set of rules. We hope you find this information helpful. My name is Matt Venuto. I lead the sales efforts for ConnectPay. I'm joined by Drew Schildwalker, who oversees our operations team.
Thank you, Matt, and welcome everyone, both our clients and our trusted advisors that we work with.
For those who may not be as familiar with us yet, we are headquartered in Massachusetts and focus on supporting small businesses with payroll processing and compliance. Essentially, we're an extension of our client's payroll department.
Originally, this recording was planned to review PPP loan forgiveness, but the new legislation passed in late December thrust the PPP2 forward and introduced the retroactive employee retention credit opportunity. So we will start with the new PPP2 stimulus, and today's agenda will be how to help businesses get more money, the difference between first-time borrowers versus second draw rules, and review the application for the Payroll Protection Program Part 2. The Consolidated Appropriations Act 2021, the CAA, was signed into law on December 27th, 2020. Some are calling it PPP2 or first draw, second draw, as it reserves $284 billion for small businesses. It also provides tax relief and expands the employee retention credit. The SBA published its interim final rules on January 6th for PPP, and that will be the focus of today's recording. Today is January 19th. We expect more interim rules regarding the employee retention credit and loan forgiveness. So let's dig in today with the first-time borrowers. Who qualified for a loan but did not get one, or those who returned all or a portion of their loan? You are both now eligible to obtain a new loan or to obtain a loan for the difference. The program was also expanded to include some groups that were previously excluded. These includes chambers of commerce, community development financial institutions, certified development companies, minority depository institutes, and the SBA microloan intermediaries. Here are the summary of rules for the first draw loans to qualify for loan forgiveness. The SBA is opening up on January 11th for new borrowers, and borrowers can choose between 8 and 24 weeks for their covered period. Employee and compensation levels are maintained. At least 60% of the proceeds must be spent on payroll costs. And non-payroll costs include mortgage, interest, rent, utilities, as before, as well as worker protection program, known as PPE, uninsured property damage from looting or vandalism, and certain supplier costs and expenses like cloud computing. Those are the new expenses that were added. So who can apply? Well, eligible small entities that together with their affiliates have 500 or fewer employees. This includes nonprofits, veterans organizations, tribal concerns, self-employed individuals, sole proprietorships, and independent contractors. Entities with more than 500 employees in certain industries that meet SBA alternative size standards or SBA size standards for those particular industries can also apply. How and when can you apply for a loan? Borrowers can apply for a first draw PPP loan until March 31st, 2021 through any existing SBA 7A lender or through any federally insured depository institution, federally insured credit union, eligible non-bank lender, or farm credit system institution that is participating in PPP. The goal is to open up today, January 19th. Then we move on to the terms of the first draw loans. So all new first draw PPP loans will have the same terms regardless of lender or borrower. PPP loans have an interest rate of 1%. Loans issued after June 5th have a maturity of 5 years. Now that was left over from before, so that's June 5th, 2020. So all notes will have a 5-year maturity. Loan payments will be deferred for borrowers who apply for loan forgiveness until SBA remits the borrower's loan forgiveness amount to the lender. If a borrower does not apply for loan forgiveness, payments are deferred 10 months after the end of the covered period for any loan forgiveness, either 8 weeks or 24 weeks. There is no collateral or personal guarantees required. Neither the government nor lenders will charge small businesses any fees.
So now let's pivot over to the second draw borrowers rules. The Paycheck Protection Program, PPP, now allows certain eligible borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same general loan terms as their first draw PPP loan. Second draw loan borrowers must have seen gross revenue decline of 25% or more in at least 1 quarter of 2020 as compared, to the same quarter in 2019. Here's a summary of rules for the second draw. To qualify for loan forgiveness, which are similar to the first draw qualifications. 1, the SBA opened on January 11th for new borrowers and second draw on January 18th. 8 to 24 week covered period rules apply. Employee and compensation levels are maintained. At least 60% of the proceeds are spent on payroll costs. Non-payroll costs include mortgage interest, rent, utilities, same as they had been previously. And worker protection equipment, PPE, uninsured property damage from looting or vandalism, and certain supplier costs and expenses like cloud computers are now part of the loan. In addition, the borrower must meet the targeted eligibility requirements. The borrower previously received a PPP, a first draw PPP loan, and used the full amount appropriately. He or she has more than 300 employees and can demonstrate a 25% reduction in gross receipts between comparable quarters in 2019 and in 2020. Now let's discuss the max loan amount. For most borrowers, the maximum loan amount of the second draw PPP loan is 2.5 times the average monthly 2019 or 2020 payroll costs, up to $2 million as a cap. For borrowers in the accommodation and food services sector, NAICS 72, the maximum loan amount for a second draw PPP loan is 3.5 times average monthly 2019 or 2020 payroll costs, up to $2 million. NAICS code 72 includes businesses in the hospitality industry. This is hotels, motels, casino hotels, bed and breakfast, RV parks, rooming and boarding houses, food service contractors, caterers, mobile food services, drinking establishments, full service restaurants, limited service restaurants, cafeterias, grill buffets, traditional buffets, snack and non-alcoholic beverage bars.
So Matt, before we move on to the next slide, the NAICS code now is part of the application. Pretty easy to just go on the internet and put in NAICS lookup, and anyone can put in their own industry and see what their NAICS code is. So just a note for people, that's part of the required information now for loans and for forgiveness. So moving on to, here's a review of the terms, which are the same as the first draw. Again, no guarantee, no collateral will be required, and no personal guarantees. And as we move on to revenue, so this, if you look at this chart here, this is probably the most important exercise that folks need to do. And the real key as we dig deeper into the 25% or greater revenue reduction. So to be eligible for a second draw loan, the Economic Aid Act establishes that the borrower must have experienced a revenue reduction of 25% or greater in 2020 relative to 2019. So all 7A borrowers must calculate this revenue reduction by comparing the borrower's quarterly gross receipts for one quarter in 2020 with the borrower's gross receipts for the corresponding quarter of 2019. The slide shows a fictitious example of a business that would qualify for a second PPP loan, but not a retroactive employee retention credit because Q2 experienced a revenue reduction greater than 25%, but no quarter ever dipped below 50%. So if you were in business for all 4 quarters and experienced an overall annual reduction of 25% or more in 2020 compared to 2019, the borrower needs to submit copies of its annual tax forms in order to be eligible for the second draw. Keep in mind that this would require immediate work to beat the deadline. If you were not in business during all 4 quarters, you still meet the revenue reduction under the 1 quarter measurement. So basically what they're saying is you can look at all of 2019 versus 2020, but you need your 2 tax returns to do it. But you can look at a quarterly basis, and that is sufficient. So moving on, borrower's gross receipts exclude the first draw forgiveness amount. So it's very important when folks are doing their accounting that they don't include their first PPP loan as revenue. So that ensures that the borrower can still receive a second draw PPP loan, even if they received forgiveness from the first draw.
Next slide, calculating your 25% loss. So in order to calculate your 25% loss, you will need revenue received or accrued in accordance with the entity accounting method, interest and dividends, rents, as well as royalties, fees, and commissions. Most borrowers will use their 2019 payroll to determine their average monthly payroll costs, although the other option is 2020. Additionally, the IFR now allows the 12 months prior to the loan as an alternative period. Seasonal businesses also have options if they operate under 7 months per year. The applicant needs to file the Payroll Protection Program Second Draw application, otherwise known as SBA 2483SD. If you're using the same lender and applying for the same amount, your lender may not need payroll documentation, especially if you're under $150,000 in total. You'll also need Form 941 and state wage quarterly unemployment filings for each quarter, 2019 or 2020. So what's included? What's eligible to spend? Compensation, salary, wage, commission, or similar compensation, as well as payment of cash tips. Payment for vacation, parental, family, medical, and sick leave. Allowance for dismissal or separation. Employer payments for all employee groups' insurance benefits, including medical, and some new items from the last round of PPP, which are vision, dental, life, and disability. Also payments of any retirement benefit and payment of state or local tax assessed on the compensation of employees. That brings us to exclusions. So excluded items are compensation per individual in excess of $100,000 annually, prorated for the applicable period. Withheld taxes, such as federal income tax withholding, an employer portion of federal taxes. Compensation for employees with principal place of residence outside the United States. Compensation for leave under any provision of the FFCRA. Compensation to independent contractor 1099s. Drew?
Yeah, so now let's run through the new application, the second draw loans, Form 2483 SD. This is the form that borrowers will use, and most will complete this via the lender's portal. So the first field is entity type, and they've added this to streamline forgiveness down the road. Next is the DBA or trade name. They want to know the year the business was established, and then the business legal name. That next field is that NAICS code. And again, you can just go to NAICS lookup, and it'll take you to the website where you can plug in your business name, and it'll give you the options as to the code that best fits your business. Then they ask for your address, EIN or social. And again, they're tying that to the first box to speed up the process of forgiveness. And then you've got your contact information, phone and email, etc. So moving down, we talked about calculating your average monthly payroll. For most businesses, they'll use 2019 payroll. It would make sense that because you're down 25%, that the 2019 payroll would be largest. And then once you arrive at that figure, so for most businesses, this is going to be all of your 2019 payroll totals, exclude wages over 100,000. Then you're able to add in health insurance, employer paid, and health insurance or retirement savings, employer paid, to come to that monthly number. And the only one that would be excluded would be owners in S Corps. But once you get that number, you multiply it by 2.5 for most businesses, or 3.5 for those in the hospitality. So those two fields across the top include that. They want to know the number of employees to make sure that it doesn't exceed the number of 300 for second draw eligibility. And then the next grid is all where you select basically the types of uses for the funds, right? Are you going to use it for payroll, rent? That's pretty straightforward. And then what we talked about earlier, the grid, they want to understand which quarter, in fact, that the business was down, comparing 2019 to 2020, and then the growth receipts. So for example, you would put Q2. Most businesses were most impacted in the second quarter. And of course, the requirements for under 150 and what the bank will ask for will be different than over 150 as far as documentation to back this up. And then next is ownership and who owns the business. And then we've got a series of yes, no questions, very straightforward. Again, moving to the next slide. These are the attestations and certifications that you were in business when in February 15th of 2020. The second one is interesting. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And then they want to make sure that you're utilizing these correctly and that you haven't double dipped and that you are in fact a US-based business, and then you would sign and date it. And then there's also the optional last page about demographics.
Well, that wraps up PPP2 for both first draw and second draw applications. Keep in mind that borrowers currently have until March 31st, 2021. As of now, we do not know if that will be extended or if the funds will be depleted, similar to what we saw this past April. Second draw requires that receipts must be down 25% or more, as a reminder, and you must certify the loan is necessary to support ongoing operation. So in closing, if you have any additional questions, please feel free to reach out to Drew at his email address shown. If you have questions or interest in our services, please reach out to myself at the email listed below, Matt Denudo. Look forward to hearing from you. Thanks.
And thank you, everyone. Again, we expect to have more information coming out regarding the employee retention credits and expanded forgiveness. So as we continue to understand the final rulings and updates from SBA and Treasury, we'll continue to update them and make them available via our website. So thanks, everybody.